Hi, this is Kerry Artek with Wicked Stocks bringing you the weekly DIA report. That is the Dow Jones Industrial Average ETF, or the more popular one, for the week of Monday, January 31st, 2022. And before we take a look at the charts, just want to encourage you to please click like each and every time you watch the weekly DIA report or any content that is put out by Wicked Stocks onto its YouTube channel. And also subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded for your viewing. And to see it early before the week begins, I think is critical for taking advantage of some of the analysis that I'm about to show you. You can use it for your trading or to supplement your own analysis in your trading. Anyway, let's jump to the charts. I start with a blank chart and show you that, as you recall, if you've been watching the weekly DIA for at least the last few weeks, we know we settled, the DIA settled just below the prior week, a couple of weeks ago, just below these convergent band of channel support that this week is at 344.20 to 346.63. And when we closed below it, we didn't do so by a 1% margin, but I'd mentioned that long-term support may be in reach this week at 333.06. That's actually the channel bottom this week. Last week it was in the 332 handle, I believe. I can't remember exactly, but we did test it, and it has held, and it is a more significant support, 333.06, than anything going on in the mid 340s right now. But the mid 340s are still an important pivotal region for the week itself. We did not close back above it by a 1% margin, so we're still kind of in that 1% zone. Are we going to fall back to 333.06 this week, or are we going to continue higher? For me, continuing higher would be indicated by pushing through, let's just say, a daily settlement this week above the 348 high from last week, and then certainly closing the week out this Friday above 348 even, I think would indicate bullish continuation into later Q1, actually. I think we'd have a good low, and we should then rally within possibly as little as 2 to 3 weeks to the 369.35 channel top. That is a new channel structure that could, if tested, say by the end of February, contain buying through March. And from there, we could fall back into a kind of a consolidated framework once again for, who knows, weeks, perhaps months. And it is the settlement above 369.35 that indicates longer-term bullish continuation, probably to the 410.22 channel top. I know I'm way ahead of myself here, but I'm kind of giving you what I see as the long-term outlook. Now, just truth be told, having tested 333.06 channel support, you could make a case that later this year, this market could continue up to the 410.22 channel resistance. But it's a little ridiculous right now to even assume as much. I think the clear indication would be a settlement above 369.35 in the weeks ahead. And if so, we're probably 2 to 3, 3 to 5 months away from continuing on up to that 410.22 rising channel top, which could contain annual buying pressures if or when tested later this year. Let's take a look at the downside, that if we do break 333.06, let's put it this way. I don't know about breaking this week. We've rallied nicely off of that area, but if we close below 333.06 this week, then we should, within several weeks with this kind of volatility, maybe 1 week, 316.89, still that long-term support that spans back to the 2009 low. That is a channel top that we settled above over a year ago, and at that point in time elicited a show of longer-term strength. And by longer-term, I'm talking multi-year, not just multi-month or multi-week, but multi-year strength. And so 316.89, if given the opportunity to buy it, I think is a significant zone of support that can contain selling not only for the year itself, but quite possibly the balance of the decade. From there, we could rally back into that congestive zone that we spent the better part of a year in, and then even higher as we move into later year. I'm just sort of painting a broad brushstroke there. But I'll leave you with this sort of concept for the week. Inconclusive as to whether or not we're going to get follow-through buying. Had we settled above that 346.63 channel formation by a full 1% margin last Friday, then I would say, yeah, the mid 340s, good bottom picking territory. We should continue into the upper 360s over the next 3 to 5 weeks or so. But that hasn't happened. So I think this market is still susceptible to falling back to 333.06 this week, perhaps. And I mentioned that if we close above 348 even on a daily basis, I think that's an early tentative green light to the upside as we continue into later February. But you certainly want to follow up this Friday with a weekly bar, a weekly settlement above the high of the low, 348 even. I think that should then yield that upper 360s new horizontal channel top. And I think that's all that needs to be said for this week's DIA. Please click like each and every time you watch the weekly DIA report and subscribe to the Wicked Stocks YouTube channel. And I think that's all that needs to be said. I will talk to you next week for another weekly edition of the weekly DIA report. You have a great week.